So good afternoon and welcome to session 107 on tokenization. Yes, it's the panel with the catchiest buzzword of the week because nothing gets finance professionals as excited as turning literally anything into a tradable digital token. Shares, bonds, properties, art, probably even brain cells in the future that I'm told, but regulation's not there yet. Let's wait for people to catch up with Mr. Musk. So tokenization is one of the ideas that we've come across in the last 10 years that sounds futuristic, but it's increasingly becoming the backbone of how we imagine finance. Making assets more liquid, market foundations more solid, and let's be honest, regulators a bit more gassy. Yes, I've covered the three states of matter: liquid, solid, and gas. My name is Aadil Bundeally. I'm a London-based management consultant. I work with big banks, insurance companies, asset managers on large-scale digital transformation, including AI. And I love doing things in a charitable, philanthropic, altruistic manner as well. And I'm conscious those things don't always go hand in hand, which is why I moonlight as a fractional advisor to certain startups and scale-ups in the fintech, regtech, insurtech space. I'm delighted to invite one by one on stage our esteemed panelists, and I'll let you observe what we all have in common. So the five of us on stage, and there's a prize for anybody who can guess that. Mr. Sven-Roger Baron von Schilling, founder and CEO of SVS Capital, a firm specializing in capital raising, IPO advisory, M&A, with over 30 years of financial leadership experience. Mr. Jiasun Lee, Associate Professor of Finance at George Mason University, a leading research university. And he focuses on blockchain, fintech, and regulatory frameworks. And I really enjoyed your presentation earlier, Jiasun, on crypto slashing. So I'm sure we'll cover the staking and slashing. Next, we have Mr. Martynas Pilkis, who's a local Lithuanian, co-founder of Axiology, a Lithuanian fintech company developing blockchain-based asset management and digital investment solutions. He's a board member at BDO as well, an accounting and consulting company. Wow, we can talk about conflicts later. And last but not the least, we have Mr. Stefan Scharnowski, an assistant professor at the University of Mannheim and chair of finance. He's here to talk to us about market microstructures, cryptocurrencies, financial econometrics, and financial market regulation. So you have the five of us here. Who can tell me what we have in common? We're different nationalities, ethnicities. I'm a Bombay boy from Bollywood many years ago. Jiasun, you're from originally from China. If you can switch your mic on. Sven, your nationality is German. You're a local, Martynas, and
I'm German.
Stefan is German. Great. So who can tell us what we have in common? Thank you. Thank you.
I have to disagree.
Thank you. But Goldilocks. All five of us. So the other thing we have in common is our interest in tokenization. So I first learned about tokenization when I was at Harvard Business School's Exec Ed first ever FinTech course. And I'll share what they taught me there. So let's set the scene. And Sven, if we can begin with you, talking about the fundamentals of tokenization to make sure we speak the same language. In your esteemed wisdom, how would you describe it?
Thank you, Aadil. Pleasure to be here. Tokenization is frequently being used as a synonym for digitization or digitized assets. I think there's a real distinction. If we talk about digitization, that is taking an analog record and making it electronic, getting a digital copy of it. For example, if we go 20, 30 years back, I remember sitting in the car and looking at a road map. And you say atlas in English? If I were to take a picture of that atlas or road map, it would be more convenient. It would be more efficient, not having to carry around the entire atlas. Now, if we talk about tokenization, we talk about digital ownership of assets, which goes far beyond that, because these assets are programmable, they can be fractionized, and they can be transferred very easily. So to go back to the example of the roadmap, which I took a picture of it to make it significantly more efficient to handle and to carry around, the equivalent tokenizing a map, quote unquote, tokenizing a map would be Google Maps, which offers you significantly more services. Or to give you another example, which is frequently being cited, contracts. I digitized the contract by PDFing it, scanning it. A tokenized contract is kind of like an API. It's a contract with built-in rules. It can communicate, interact with other contracts, a smart contract. So there is a clear differentiation from my point of view. I hope that helps a little bit.
Thank you, indeed. Who else would like to chime in on this? Go ahead, Martynas.
Yeah, so thanks again. Before joining the current startups that I work for, I spent a couple of years in BABL, Bank for International Settlements, where we did some groundwork on tokenization and stablecoin standards in 2022, 2023. And at that time, between central bankers, we had lots of vivid discussions. Is tokenization only DLT, so distributed ledger technologies, or can we take any digital technology? Is it basically the same like digitalization? And the consensus seems to be now in the definition that when you tokenize something like a real asset or financial asset, you take it from the traditional ledger, usually centralized one, with less programmable features, and you put it on programmable platform. So this automation, programmability, this is the key distinction. Does it have to be blockchain? Not necessarily. Although in current implementations today, most usually it's some kind of blockchain.
Thank you. Jason, from an academic perspective?
I think I would actually typically tend to think about tokenization from a more narrow perspective, but I agree that this is not a terminology that all have been agreed upon. And for me, a simple way to think about it is that having digital records is digitization. It's a more general term. And you have the digital records staying on the blockchain or on any like permissionless systems, and then make it easier to transfer, make it more interoperable with other systems. That would be tokenization. And I think it's sometimes, I think for a audience not familiar with this topic, just saying that, okay, that if these assets live on a permissionless blockchain, and just putting that kind of qualification, I think is helpful for framing the concept. But on the other hand, I think like having more general definition is also helpful. And it is a kind of fluid term that we're also just trying to figure out what it is, yeah.
Agreed. And being a very pedantic management consultant who's spent the last 15 years digitalizing dinosaurs like Lloyd's of London, a 300-year-old insurance marketplace, and banks like Barclays and ABN AMRO, you saw that I didn't use the word digitize because Sven's already given us a good description. PDFing a document is digitizing it. or scanning a document, a printed document on your printer and saving it is digitizing it. Digitalizing is a paradigm shift of the act of immobilizing paper from the enterprise. We've digitalized the cashless economy is a good example of digitalization. So we're not digitizing cash by simply scanning a note, right? If we did that, that would be digitizing. We're digitalizing the whole end-to-end process. So we've covered digitization, digitalization, and tokenization. So Stefan, final word from you.
I think we could discuss these definitions of these three terms for the entire hour that we have. For me, digitization would maybe be something slightly different, basically just expressing something or translating something to numbers, something that I can very efficiently store in a way in a type of database, something that I can very easily communicate, so I can grasp this with some key characteristics of it. So I have this as some kind of digitized form, then I can digitalize this to have this in zeros and ones. So I just reduce the set of numbers that I have. And then a token for me mostly would be something that you would put on a blockchain. So that would be the tokenization that we talk about in a finance context. That would be my working definition. Though just this morning I updated the slides for my presentation that I'm going to have later on tokenization, where I have the representation of ownership rights as a digital token on a blockchain, and I removed this on a blockchain part because I just wasn't all that sure anymore. So that would be my three definitions.
Makes sense. Thank you. So, Stefan, we'll stick with you if that's okay. And the next topic is about the promise versus the peril of tokenization. So what do you see as the most compelling benefits of tokenization to financial markets? And conversely, what keeps you awake at night when thinking about the risks? And you can answer that from an academic perspective, and I'd request the practitioners to think about the wider financial market risks. Carry on.
These are good questions. I think I'm just not emotionally involved enough to actually have this keep me up at night. But let's talk about the benefits and risks. And when I think about the benefits, I like to think about the proposed benefits of tokenization, because so many people have different benefits in mind. We've already covered this. What I think is probably the most exciting, most relevant part of tokenization, that's this automation, this interoperability, this programmability that we have with, well, if we're in the blockchain space, that we have with smart contracts. So I think this is really what sets it kind of apart from other ways of having digital representations in a way. Then other proposed benefits that are always discussed when it comes to tokenization are things like 24/7 access or global access. We have fractionalization or fractional trading of these assets. We have the security and immutability of blockchains, and a couple of other things, sometimes just generally efficiency gains, whatever that then means. What I find interesting when I think about tokenization is that a lot of these proposed benefits that people talk about when it comes to tokenization don't really require another technology than what we have in TradFi. They don't really require blockchains. So, for example, when we talk about
TradFi is traditional finance, DeFi is decentralized finance.
So when we talk about, for example, 24/7 trading of tokenized assets, there's not really a good technological reason as to why we can't have that in traditional financial markets. There are institutional reasons, for example, because if there are humans involved, they like to sleep, or or for exactly, or for example, the fact that we have with 24/7 availability, we have liquidity fragmentation. We can see other economic factors at play that drive people to trade at essentially the same hours during the day, because that's when everybody else is trading, and that's when they have the highest liquidity. So there are economic and institutional reasons for not seeing some of the proposed benefits of tokenization. Still, I think this aspect of smart contracts, of programmability, that is something that is really a benefit. And I see one of the big implications of that when it comes to collateral. So I can prove that I have collateral, maybe pledged somewhere, but I can already program this so that when it becomes free, I can use it for something else. And that's not something that we really see at a large scale with kind of the traditional approaches that we have.
Thank you. That makes sense. Martynas?
Yeah, so as for benefits, small example. Next quarter, my startup is premiering a multilateral trading facility, which will be integrated with also CSD functionality, so centralized securities depository for corporate bonds and government bonds. And all in all, the offering will be 2 to 3 times cheaper, depending on service, than what we can get in this part of Europe today. So immediately, because of certain disintermediation, joining a couple of different silos into one integrated distributed ledger technology platform, you can see cost savings from day one. So I would say this is the biggest benefit, that you can very clearly explain and show the numbers to any CFO or other decision maker doing the B2B buying decision. That's the most important part, like today, because all these visions about capital markets, how they will evolve in 2050, far away game. But something that I can get today or next week, that's the most important. Now about the risk, I think that tokenization and innovations in capital markets, in this part of dictionary, tokens this, tokens that, it's closely related to crypto industry, and we've seen over the last decade lots of bad blood there. And if and when a big company goes under, so we had some experiences in Japan, Mt. Gox years ago, then in United States, FTX exchange not so long ago, right? And if and when we see something like that in Europe, it will be a shake-up moment, which really shakes the confidence in the industry and in the potential of innovation, because one bad actor is hurting not only himself or herself, but all the industry in general. So that's big risk. And just the final risk is current day tokenization. Quite often it's legally not very robust, to put the least, because when you tokenize something without proper regulatory underpinning, you risk, in the event of the tokenization agent bankruptcy, the ownership rights will not be legally honored. And if and then this happens, again, you can see the shakeup that I was referring to.
Makes sense. Just to contextualize this for the audience, would you mind giving us a one-line value proposition of Axiology so people know what you're all about?
Yeah, Axiology is an integrated investment firm, central security depository, and multilateral trading facility that is coming here to revolutionize the world of corporate bonds, from the issuance till the very end of life cycle, when you have maturity payments, interest payments, doing trading venue function, depository function, transfer agent, paying agent, putting it all into one and saving lots of money for those who are in this business.
And the name, the genesis of the name.
Yeah, so Axiology is about different axes coming together. For a long time in capital markets, we've seen there is one silos for depository, there is one silos for paying agent, there is one silos for transfer agent, one silos for this, for that, for that. So when you have all the axes coming together, that's Axiology for you.
Brilliant, thank you. Jason, benefits, risk?
So as a simple-minded economist, and I will cut through a lot of technical details, and I like to think about the economic essence, right? We think about what is the essence of tokenization. It's actually trying to find a new way of representing assets, right? So I would like to follow this train of thought and to think about where the benefit and the risk comes from. So if we think about that, okay, if tokenization is about representing assets in a different way, then the benefit must directly come from that, okay, there are certain benefits in terms of a different representation. So I think for me, this is a useful way. It's kind of sounding a little bit abstract, but also I think it's kind of, to me, at least to me, a useful way of framing what are the benefits could be. Because I think there are, like the panelists have already mentioned, a lot of different benefits. And I think some of the benefits are something that we are yet to see. And some of the benefits that we see some emerging evidence, but maybe it's not that compelling yet. And maybe there are more that yet to be seen that we are just like it's beyond our imagination now because tokenization is still at its very early days. But I think I would always, whenever any new benefits that people come to propose about tokenization, I would always try to fit into the framework about how is this related to the way assets are represented. So I think analogy I would make to my mom, who doesn't understand this thing at all, I would be just like, well, like you can express a certain meaning in one language, and maybe you can maybe in English or maybe in German, right? So and there may be certain benefits in representing them. Now, for example, in AI, people do embeddings, right? All the words become like 0101s, and there's clear benefit in those settings. Right, so I think I would just leave it a bit open, but I would say that when there are different ways of representing assets, there are potential benefits, and I don't want all the benefits that we see to be constrained by what we currently can imagine. But I think if we make the analogy, say like, because I think it's reasonable to say that now everybody can see why embedding words into the 0101s are useful. And if we use this analogy, then I think we can unleash people's imagination, think about what tokenization can potentially bring to us that we are yet to be able to imagine today. Yeah.
Cool. Sven, please.
I'd like to pick up your opening line. Being a very simple-minded practitioner, businessman, having been involved in capital raising in the private sector and the public market sector for more than 20 years, one significant benefit I see and I would like to focus on right now is the ability to fractionize assets. Because from my point of view, that significantly eases or facilitates capital raising. It helps to make illiquid assets or projects liquid, and it allows investors access to certain investments that originally they didn't have any access to. Now, to make this a little more tangible, I like to refer to tokenization as being the version, this is simplifying it, as being the version 2.0 of crowd investing or crowdfunding. I am involved in South Africa. I'll be talking about tokenization of Africa tomorrow and how tokenization can be a solution, or from my point of view, will be a solution to resolve the massive funding gap we, for example, see in Africa. Tokenization, just like crowdfunding, allows to bypass the conventional way of funding and financing businesses by addressing and attracting new kinds of investors who have an interest in investing in certain projects or companies that weren't accessible to them prior to crowdfunding or tokenization having come on the stage. So a huge benefit from my point of view is making illiquid assets liquid and tradable, and tokenization democratizes access to investment opportunities.
Wonderful, thank you. I'm glad we've kicked off the liquidity conundrum. Let's move on to the adoption puzzle now. So despite years of promise, we're still seeing relatively limited commercial adoption of tokenized assets. So I was at the House of Lords in the UK at a blockchain-oriented talk where they were talking about tokenizing the stamp duty, which is a tax you pay when you buy or sell a house. Another example was tokenizing the motor vehicle licensing when you get your registration certificate, your number plate, or even driving licenses that you and I have. So that's a public application. But they've been talking about that for the last 10 years. So what's the biggest bottleneck? Is it regulatory uncertainty? Is it technological challenges? Or is it simply that the business can't make a compelling enough case? So Martynas, we'll start with you from a business perspective.
Yeah, thanks a lot. Yeah, that's the question that keeps me awake at night. And first things first, we are in FinTech conference today. And FinTech as an industry, especially in the Baltics, saw the best uptake in the initial stages with payments. Big question why? Because payment is something, it can be of a small value, and you are okay to play a little bit with payment. So you are not that cautious, to try something new in the payment industry because maybe I'm just paying for a cup of coffee, 2 or 3 or 4 euros, right? I'm not afraid to try a new vendor. When it comes to capital market, when it comes to something touching big sums like my pension savings, like my main bank account and so on, the hurdle becomes higher. So in the FinTech evolution, we've seen starting with small and coming to big tickets, step by step. So now we are on the verge. I do believe we are in a pivotal moment when finally the FinTech wave in Europe can revolutionize capital markets. And we see more and more action with this. DLT pilot regime, under which my company is operating, we got our license from European Security Market Authority.
Distributed ledger technology,
yeah.
DLT.
DLT pilot regime, distributed ledger technology, EU-wide pilot regime. It went into effect in 2023. We got our license, which is only the second in Europe this summer, and we are starting our operations this autumn. So you see, even after the legal regime comes in place, which took 5 years to draft that legal regime, to approve it, for that legal regime to come into place, it takes years and years and years even to start making something real. And then for that to show impact, it will take another decade probably. So it's a slow process. Big part because finance, by its nature, it's a conservative industry. When we play poker for fun, we play more daring. When we play poker with money, we play more cautiously. That's a fact. And the same goes in FinTech. The bigger the sum included, the slower the adoption, but the network effects were starting. So just to finish this up, for companies like Axiology, we are starting with places in capital market infrastructure where we have underserved needs of clients. For example, today on our website, we publicized the partnership with Let's Invest, which is one of the biggest crowdfunding platforms in the Baltics. Instead of only doing private loans, they want to do bonds accessible to the investors, and they will be using Axiology as a financial infrastructure underpinning it. So slowly, but starting, you will not be starting that with the biggest banks in the world, but step by step we'll get there.
Fantastic. So you're starting with the Baltics. What about the other parts of Europe and dare I say the UK?
Yeah, of course, we are looking into Germany, which has also a local regime for electronic securities, but they are very open for European regulation. We are closely working with some partners in Scandinavia, so eager to publicize that soon. So our home base is Baltics naturally, but we are very eager to take the benefits outside as well.
Great, thank you. Jiasun, would you like to cover the American, but also the Far East perspective? Thanks.
Yeah, so I'll answer the question from 2 aspects. So one is more practical and the other is more philosophical. And I think from the more practical perspective, I think my experience, it seems like in the past couple of years, at least in the United States, is that I think regulation uncertainty certainly plays a big role. And we know the previous administration, especially, I think the previous administration was not, it actually, now because people are very short-memoried, right? People have short memory. So people always think about the previous administration is very against crypto. But it actually only happened after FTX blowed up, right? So actually at the very beginning of the administration, it doesn't seem to be a very clear sign of which direction they are actually going. I was like working on my teaching materials and just reviewing the history, and I see that 2022, the Biden administration had this proposal, executive order, asking all the government agencies to actually study about blockchain technologies. And I remember living through that time. I think the media, like just the media and the consensus at that time is this actually could turn out to be a positive sign. Although like we know how things, the rest of history, we know like how things actually end up being. So I think the regulatory uncertainty certainly is not very helpful in the past couple of years. So certainly this is changing. So we'll see how it go in upcoming years. And I think in Far East, for example, I think regulatory uncertainty also plays a big role. I think I cannot say for a lot of other countries, but I personally think, like for example, China. I think for the Chinese government, a big concern for them is capital control, right? So, and I think this is greatly ties their hand. Like even though, like for example, the top leaders in China, they have go on media and. Typically they don't go on media, right? They don't want to have a record, but they go on media and touting about all the benefits, encouraging all the benefits of blockchain. But on the other hand, they are very careful and cautious about any financial applications built on top of blockchain. That's kind of, and they want to encourage all other use cases. But the problem is that like blockchain, especially decentralization, like decentralized permissionless blockchain, decentralization is costly. So you need something, you need applications that is, first of all, have strong requirement for trust and also have enough value that can actually overcome the hurdle of the high cost of decentralization. And that is finance. And if you are not allowing finance to do it, the infrastructure are not going to get enough financing, right? So then it's kind of just like I would say there's a cycle of development. You have high value applications to subsidize infrastructure development, and that will be able to enable more lower value applications. And this is how the cycle just goes along. But I think at least in China, I think the cycle just cut in the very beginning. So despite all the wishful thinking they have for what's coming up next, it stops at the very beginning.
And who makes it stop? The regulators.
I think the regulation are. I think they are careful about capital control, and second, they are careful about unsophisticated investors getting into it, and they may cause like societal instability, right? So I think that's why they are very adversary to financial applications, and that certainly I think is not good for financial application on blockchain in general and tokenization in the first place. But I do want to say that I think they are using for example, the Hong Kong HSR, right? SAR, right, as a sandbox and trying to do a lot of experiments there. But I would say that we'll yet to see, because I think the Hong Kong market is a bit small. If you do not, Hong Kong has its great value because it connects the greater China versus the rest of the world. But if the Chinese market is like shut to this, I am not completely sure how much Hong Kong can do it. But we'll see. Maybe there are creative.
Before we go to Sven, Martynas has a point.
Yeah, just small points. So in Basel, I saw lots of infighting between G20 members, and in general, very much to second what Jason's saying. For developing nations, India, China, and others, they see tokenization and stablecoins as a sort of developed world plot in order to break apart the currency controls and flood the market and dominate them financially. So this kind of thinking, I think it will evolve over time. But for regulation, for example, in the European Union, we see lots of damage coming from the framing of DLT as something still in a sandbox mode. So for us to see business success and the wide adoption of DLT in capital markets, you need to stop the language of this being pilot, sandbox, experiment, and finally to go into production, and for regulators to say that we are not only testing this for 5 years and when we will decide to do, but change the rules for good.
Very well said. Sven?
Two comments I would add to that. Regarding regulation, I think I totally agree with all of you. I agree, or I think it would be extremely helpful, and I would hope that we come to some kind of harmonized regulation. That would be helpful to push the case. And secondly, Another bottleneck from my point of view are the incumbents, the banks, the financial services providers. They are just pushing back and holding back because they still make good money in the legacy environment, and they're reluctant to move on because it will be significant competition to them. And we all know that banks, the conventional banks, are not really good yet in data management, IT, and all that stuff. So they really consider it as a severe threat to their business, and they're just pushing back wherever they can. Technology as such, I don't think is a bottleneck at all. Everything is in place. It is, from my point of view, regulation and the incumbents.
Got it. Very well said. Thank you. Just building on that, and let's try and rethink the whole concept of intermediaries, and they could be incumbents. So tokenization promises decentralization. We've all covered that. But it also is all about disintermediation in some way or the other, right? But are we actually seeing this in practice? Are we getting rid of intermediaries, or are we simply creating a new form of intermediaries that we haven't quite figured out how to regulate? Jiasun, shall we start with you? Thanks.
Yeah, so before answering this question, I also just want to add something more onto the previous question, because I said I had some practical response about what the adoption hurdle is. I also have a philosophical one. And the philosophical one is kind of just goes back to my framing about how to think about tokenization. I said tokenization is kind of coming up with a different representation of assets, right? So like, again, to just make an analogy with the language, like we always, by the panel, like we have been doing, conducting in English, right? So suddenly one day you say, no, we actually have to conduct this panel in Lithuanian, right? Or maybe just a Kogan, some language that's from AT, right? So, and it's a different representation. It has different, it potentially has different values, but we can see the network effect is going to kick in. And so I think my prediction would be that tokenization will have a slow start. And also we want to understand that this, now we are talking about tokenization, but this tokenization idea has been discussed for almost a decade now, right? So, so we will see wave of these attempts, and the similar question about why adoption has not come along will be asked repeatedly until one day overnight, this S curve, we see that, yeah, it's just got adopted because there's multiple equilibria in this network effect thing. Yeah, okay, so that's the philosophical one. And to your question,
intermediaries.
Intermediary, yeah. So I always think that this intermediation is a very is a kind of attractive slogan to some group of people. Okay, but I think what we have always been seeing is a new form of intermediary. So the mental model that I have in mind is that, well, there are certain type of actions that need to be taken by certain group of people, and there are, I think so far I can imagine 3 ways of doing it. One is to rely on reputation, and that is what we are familiar with, the TradFi system. And then this blockchain system is to rely on check and balances between self-interested parties, right? So I think there's actually increasingly, there are, I talked to a lot of computer scientists, like they are all crazy about trusted execution environments. And that's, for those who are not familiar with this, is this basically just kind of a computer chip that have higher privilege, so that when you send your software into that particular area of the chip, and nobody else even on the local machine can mess with it, right? So now, like, a lot of papers and research I personally also working on something, research, experimenting with this. But you can think about this is also a kind of a way of ensuring trust, but it's also different from...
What's it called again, sorry?
Trusted Execution Environment, TE. So like Intel has the first version is called SGX, and I think that now the version they call is TDX, Trusted Domain Execution or something. I may mess up with the full name. And there are also other solutions like a snark and all that type of stuff, verifiable computation. But I think their performance is not as good as TE at the moment. So I think TE is going to be the next, the most immediate next wave. But anyway, so I think there are different ways of ensuring trust, reputation, check and balance by incentives, and cryptographic, either through hardware or software. And if we take one perspective we can take is that they are all different forms of intermediary, right? One is intermediary through, like it used to be in JP Morgan Chase, we trust. Now in math, we trust. In incentives, we trust. Or in cryptography, we trust. Right? So I think this theme is, I think thinking about all of them as different ways of intermediation is always helpful, because that will kind of related to your question, that would be related to what kind of regulatory approach we can take. Yeah.
Thanks. Stefan, would you like to go in?
Yeah, I like your approach of this high-level thinking about what intermediation is. I think the more classical way of approaching this is to think about institutions and how many institutions are involved in the value chain. And there, I think what we have seen with the few cases where we have successful implementations of tokenization is that we don't necessarily have a disintermediation or a decentralization, but we have systems that, in some cases run in parallel to the established kind of system, and that actually introduces more intermediaries. I mean, they may not be in the same kind of value chain, but they might operate in parallel to this. So if we have a setup where we have, existing financial assets, for example, or other assets, and then we introduce a custodian that issues tokens, and you can trade these tokens, I fail to see the decentralization and disintermediation. If we have other approaches, like what I understand you're doing, where you, are involved in the primary market, where you issue these to begin with as a token, I can see some disintermediation. It's still not the decentralization that everybody is talking about, but I'm not sure that's where we want to go. Of course, if you're in that hardcore Bitcoin scene where you don't trust any kind of central authority, yes, you want total decentralization. For a functioning, well-regulated financial system, I'm not sure this is where we should go in order to have some checks and balances, not just by incentives but also by enforcement.
Agreed. Martynas, you want to say something, and if you wouldn't mind picking up the questions as well while you're at it. Oh. What problem does tokenization solve? Let's do that first.
Yeah, sure. So I think the thing that I wanted to stress is that with tokenization, if you do the system well on technological and legally robust rails, you can actually save a cost. Because in Axiology example, okay, so to move away a little bit from theory, because in theory we see that tokenization makes sense, and economists at the BAS and other very respectable institutions, they did their analysis, and tokenization makes sense. Okay, now the question is about adoption and the bridging the theory with reality. So to bridge reality, you need new type of intermediaries. You need not probably disintermediation, but re-intermediation. Then the different functions, again, in the capital market infrastructure, payment system, depository, trading venue, transfer agent, paying agent, and all the other functionalities, not to mention more difficult CCP models and so on, you can make it reframing that into a novel system where you have less reconciliation, less silos, like in Axiology. They have corporate bonds, government bonds, and settlement asset, which is stablecoin regulated under the European Union law, living on the same software, the same system, meaning that you can do much more automation and programmability built in from the get-go. Instead of reconciling between bank ledger for money, central security depository ledger for first-level accounting, custodian ledger, so big institutional bank for custody, you have one single ledger with automated processes on it. It makes it cheaper, it makes it faster, it makes better consumer experience. But does that mean that we directly connect retail investors into our system? Legally, we could do that as Axiology under our license. But in reality, business decision has been made not to do so and to do B2B2C. So we are selling our infrastructure on B2B basis for banks, crowdfunding platforms, investment firms, neo-brokers, and they invest millions into marketing and making the best investor experience for retail, because that's actually different business. It's one type of business and one economic function to do depository, trading venue, all the back office functions. And it's very different business to pile in millions of euros into marketing, what eToro, Revolut, Trading 212, and many other players are doing. Robinhood now from Vilnius. So these are different games. You cannot get rid of all intermediaries. In financial world, they will remain, but I do believe we will see re-intermediation.
Very well put, thank you. Just conscious of the questions. Do you consider the following as challenges explaining the lack of high quality settlement assets, lack of, I can't read it, the light's hitting it. Netting, is it? And who's Emmanuel? Yeah, great, thanks. And profunding due to atomic settlement and lack of standardization. Who can take, what is atomic settlement?
Yeah, I can.
Sure.
Yeah, so briefly on atomic settlement. So when we do atomic settlement, instead of the current capital market infrastructure where the settlement usually takes 2 days to finalize, it's like T+2, meaning in 2 working days, you'll see the final irrevocable switch. So corporate bond is switching hands from one to another, and money, most often in central bank money shape, is also changing hands. But this takes 2 working days to orchestrate. In atomic settlement, you usually do it on the same technological level. So in our system, it's a distributed ledger technology network that we own and operate. And the stablecoin, which is a settlement asset, is changing hands in the matter of a few seconds. It's like instant payment in what we know.
Got atomic, of course. So
atomicity means that instead of having a few IT systems to reconcile, you do it in an atomic transaction.
Understood.
It's either done in a few seconds or just falls apart and not done at all. So the risk is minimized in a new way.
Very well put.
If I may chip in there, I think this argument of atomic or instantaneous settlement that's often brought forward and contrasted with the T+1, T+2, T+3 settlements that we have in financial markets. But again, there's some institutional reasons for why we have that. It's not really that banks need 3 days to settle a trade, but because of, for example, netting, because that might reduce liquidity needs. You don't sometimes want the instantaneous settlement. Whether or not that's good or not, that really depends on your needs. So just saying that it takes too long maybe doesn't capture the reality of doing business. Sometimes you want
and
to
the benefit of netting when we're talking about such large sums, just
exactly,
from an
yeah,
interest
that's
perspective,
massive.
even in intra-hour interest is massive, exactly. Now I can see what's written, I've zoomed out a bit. Do the degree and characteristics of decentralization and disintermediation differ depending on which stage of the life cycle of an asset we're at? Issuance, trading, post-trading, the blockchains used. Should these concepts be distinguished from automation? Very good question. Who can pick this up? So the trading life cycle.
I'll make an attempt.
Sure.
I'm not sure whether the life cycle of a transaction may necessarily be the best categorization in terms of difference in terms of decentralization and disintermediation. It may very well be. I just not have thought enough about this. But I certainly think about asset attributes may contribute to what level of disintermediation and there will be. I think the asset that is more detached, this is very preliminary thinking, so I may actually revisit it later, but I think the farther distance that the asset is from the real world asset, I think right now it seems that decentralization will be easier to achieve. One example we think about is actually Bitcoin, right? So, and I think the closer it is to the real world asset, then the role of intermediation will play a bigger role. And I think, like, to add to this, I think one hurdle that which I have personally have not resolved, and from my personal perspective, maybe smart people can give him an answer, is that if you try to bridge the physical world and the on-chain world, right, the Oracle problem is inevitable. And right now, I don't see a perfectly like trust minimized Oracle solutions out there. There are a lot of functioning ones, but they are actually still, you can, if you look closely at them, there's a lot of trust baked into them. And on one aspect, I'm also kind of pessimistic about whether this can be done or not. So I can tell you why, and you can correct me. Because one Oracle problem, I think, a very classic Oracle problem, even though nobody puts in that way, I think is about the just on the internet, like internet certificates, right? Because we know what nodes we can communicate. We just need IP. But if I want to know this IP belongs to Google or whatever, we need a certificate authority. And like, look at how the CA is done in reality now. It's all based on like just a certificate authority. They are trusted entities, right? So I think this is actually an Oracle problem because they are connecting the online world of IP and the physical identity of a Google or like 3F, like the organization, right? So I think this is an Oracle problem, even though people don't put in that way. And this problem has been out there for decades, just as internet has been thriving. And there are a lot of people who care about incentives like trust minimization because it's internet world. But for decades, we have not come up with a trust minimized solution for that. So I'm very pessimistic about whether Oracle problems can necessarily be resolved or not. If my pessimism is there, that means that the tokenization, this entire thing, will eventually still need more or less some intermediation there, right? So that's why I think, just coming back to this question, I think like the last mile in which the physical world and the digital world interact, this may be the part in which decentralization may be less present. And that's also related to a previous question in which, like, how do we think about intermediation and how do we regulate them also will become important.
Thank you. So we've heard the academics' point of view. Martynas, would you like to cover the startup business one?
I think that automation and tokenization is somewhat different concepts. So with automation, you can have workflow automated across different IT systems, different ledgers, different silos, still making that, if something happens on that silo, I automatically execute action on another silo or another IT system. While tokenization, as per definition, so coming back to the very first question of yours, it's usually if we can have a real world asset, financial asset, fully living on a programmable platform. So that's more of a single or unified, if you will, interface. So that's the main difference between automation and tokenization. When we speak about tokenization, we want to see the token being executed across various programmable smart contracts and whatnot in a single platform. So I think that's the key. And I see a question, if we can take one. Maybe related.
I think
Sure.
this also brings us to the question of the standardization, right? Because I mean, you can tokenize everything, but then everybody has their own chain, and then it's still you need bridges, and it's fragmented. So I think standardization is also part of the problem here.
Thank you. Emmanuel, please go ahead.
Sorry, thank you. I'm just asking about the concepts of disintermediation and automation, because usually where is automation, they say they consider it like disintermediation. For me, it's not the same, because there is accountability when there is an intermediary.
Absolutely.
And because the crypto market was developed like that, but the traditional market does not work like that. So it doesn't disappear because of automation.
No, that's absolutely
for
true.
intermediary in order to access the market. And there are also, in traditional market, there are examples that in legislation were treated differently,
Sure.
like direct market access, where you, in the traditional finance.
Thank you. Yeah, no, absolutely. How would you respond to that?
So very briefly, disintermediation cannot poorly happen in financial markets because there is an economic function played by intermediaries. So this will not change. I would rather speak not of disintermediation, but of re-intermediation. Like with taxis, Uber is another type of intermediary in ride-hailing or taxi market, right? So taxi market is still intermediated, but in a different way. Same is happening with finance as well.
Thank you. We're almost out of time. It's been an invigorating hour, so thank you. And I'd like to end with a blessing to you all as a token of my appreciation for your time. May your digital wallets always be full, your transactions swift and secure, your tokens never lose their value, may your blockchain never fork in the wrong direction, and may your crypto gains be as high as your spirits. Thank you.